This conference will now be recorded.
Okay, good morning, everybody. It is Sunday, October 3rd, 2021. This is Greg Morton, and this is the weekend video update for the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. Oops, so standard disclaimer, we'll stick with this guy for another weekend. You're driving your own portfolio. You and you alone are responsible for your mistakes. So I'm not recommending stocks or securities to buy or sell, particularly now as the market's in correction. So I shared this last weekend. I liked it, thoughts on mistakes. I never make the same mistake twice. I make it like 5 or 6 times, just to be sure. And then sometimes I just want to go back in time and punch myself in the face. So we want to do post analysis. That's what that relates to. So I like those thoughts. I left them in there for one more weekend. So we're going to look at today the M factor, market review, and market direction. So 2 weeks ago, this was the introductory slide. I thought we were going to talk about the market showing some cracks. But then last weekend, I had in there market healing the wounds. This weekend, kind of have a clear picture of things suddenly, and it's not pretty. Just an absolute train wreck last week. Here's another one. I like both those. Just a total mess. So we'll look at some chart reviews, including the 6 we looked at last weekend, and we'll just see how the market trashed those this week. And then we'll go through the details on the prior meetings and our upcoming October meetings. So the M factor is the most important letter in Canslim. As O'Neill teaches us, we always want to diagnose, we want to interpret, we don't want to predict. And so to determine the market direction, we look at 3 things: the action of leading stocks, that's poor right now, actions of stocks owned, a bunch of the group teaching portfolio got cleaned out, we'll look at that. And then market pulse, distribution day count is ugly, as well as price and volume on the indexes is ugly. So we'll take a look at all of that. So we'll go to Market Smith. Let's jump out of this and go over here and start with the indexes. So here's the NASDAQ on the daily. You can see we're under the 50-day, and the 10 and 21 have closed below it. As I often say, Canslim works better when we're trending above an uptrending 50-day moving average line, and it works best when the NASDAQ is trending above an uptrending 21-day EMA line. We have neither of those right now. And in fact, this past week, this is very ugly. So we had 4 days down in a row, and all 4 of them were on distribution, were distribution days on above average and escalating volume. So those 4 bars right there are very concerning. And then Friday, get a little bounce back. It is above average volume, but it looks like it's lower than any of those distribution days. So that's pretty anemic. And of course, IBD went to incorrection this week, as you can see by my little color ribbon at the bottom, which has not happened since back in March of this year. Been mostly green with some under pressure areas, which are yellow. That's sort of where we are. I put on here the dotted red line is 13,683. That's 10% off the top, just to keep an eye on that. Of course, that would bring us down under the 200-day if we get there. Other indexes don't look any better. S&P 500 did not have the 4 distribution days in a row, but had 3 distribution days this week. Again, under the 50-day, 10 and 21 have turned down and have crossed over the 50-day. NYSE, similar. Moving average lines are no longer in the correct order. They've crossed over. Dow, same thing. Russell, so small caps looked a little bit better, back above the 50-day, and same thing on the S&P 600. It looks a little better, but can the small caps really lead us higher? Normally not. Maybe they're indicating we can have a turn, but things look bad on those 4 main indexes for sure. And if we jump over and look at the group teaching portfolio, we go to the dashboard. So this week we got stopped out on the downside and had to take some profits on the upside on some of these winners, partially that were near the 20 and 25% profit goal. We just got clobbered. These were ugly days. Monday, heavy distribution. Tuesday, heavy distribution and losses. Wednesday was a distribution day, was up just a little. Another distribution day Thursday, I put the red borders around it, and even we're down on Friday. So knocked down our year-to-date gain to 16.82. We were up over 20% and down to only just under 25% invested on a cash basis or 15% on a margin basis. Obviously, no margin used, and have built up a great deal of cash right now in light of this market. So we only have 3 positions left. Since they're supposed to full position 60,000 by size, it's only 1.7 positions dollar-wise, and we'll just see what happens if the market takes us out of these that have been holding up okay. Well, DOX is actually building a base, hopefully sort of in a correction, but we have a very big gain there, so we have it backstop to protect 50% of that gain. But just an ugly week. No way to put lipstick on that pig. So let's go back to the presentation. So we covered that, sorry. All right, so here's my red flags list, just going through and looking at all the things that are very concerning right now. So IBD flipped to red in correction, like we talked about. Distribution day count is elevated, 8 on the NASDAQ, 6 on the S&P 500, 6 on the Dow. I'm still counting them on the Dow, even though IBD is not, and I will continue to count them even while we're in correction, although IBD does not do that either, but I like to know what the count is. We have clustering, which is 4 in an 8-day window. We actually have 4 in just 5 days on the NASDAQ. So if we get some more, we're even going to have higher clustering. We had 4 in the row on the NASDAQ. That's pretty rare. I went back and looked. Last time I could find that was at the beginning of the COVID bear. We had 4 in a row on the NASDAQ, and then right after that had 3 in a row on the NASDAQ and S&P 500 side by side. Distribution volume is escalating, as I showed you on the bars, and is very high. The buy selling day count in the coloring book is at 8 buying, 11 selling. Oh, I need to flip to that. We'll look at that in just a minute. MMTS are all red except the small caps. Can they really lead higher? Let me go back. We'll look at the coloring book real quick. So you can see all the red down here in that. So we had 4 selling days this week, no buying days. There's the 8 buying days, 11 selling day count within the 25-day window, which starts at the orange dot. MMTS on the big 4 indexes is red. It is yellow on the Russell. Has stayed green on the S&P 600, probably due to the financial weighting there. IBD went to red there on Thursday, and then the window of opportunity closed a day sooner than that. So it's still red. So we had those heavy selling days, big down, 2.8% down on that Tuesday. Those are just big down days. So you can look at those, a lot of red. I put those really bad days. I bolded them in red. So we got 3 of those this week. We just have to watch and see. The market school exposure models at 0, and the power trend has turned off. It was under pressure all the way down through here, and it finally turned off. So that's where we are on the coloring book. Go back here. Oh, sorry, made me go through that again. So other red flags, the accumulation distribution on all 3 indexes is at an E in the newspaper. The ARC funds, if we look at those, which are sort of a proxy for the growth stock trade, they're ugly charts. They're getting hit. Last week, the market trashed my watch list of what I thought were several top stocks to keep an eye on. They look terrible after 1 week. Power trends off, window of opportunities closed, and perhaps most importantly, we don't have setups in growth stocks right now. What's performing is oil, gas, fertilizers, coal are strong. So last weekend, this is what I had in the slide. I thought we were at cautious optimism. Last weekend, I said it was okay to start wading back in slowly. We wanted to be super disciplined. And last weekend I said, stay tuned to the M factor. There could be some little bears hiding in the woods. I changed it this week. Perhaps there could be some big bears hiding in the woods. Not predicting. We just have a lot of red flags, as I pointed out. So for now, the buy switch is off. We're looking for a follow through day plus something, and the plus is proper setups in Canslim growth stocks. So we need a rally day, which we had Friday. We need a follow through day, normally on day 4 or later, which is at least a 1.25% gain on the NASDAQ or S&P 500 on increased volume from the prior day. And it's better if it's above average volume. But bases take a while to set up. So this could take a few weeks also. Again, not predicting, but just trying to stay in tune with what the market's doing. So we'll be very aware or beware of the FOMO pandemic. There's always going to be something working. So we can look at 1 or 2 stocks, or you can look at the coloring book and say, well, such and such Merck just broke out. Well, yeah, it did. But when we look at it overall in the game of probabilities, sometimes it's just better to turn off the buy switch and preserve your fiscal capital, and more importantly, your mental capital. So in the weeks ahead, here's some market moving events to keep an eye on. So EPS season's getting ready to ramp. That could push the market higher, but it also could push it down. Delta COVID, still sort of an uncertainty, but things seem to be opening back up without super spreader events cropping up. Chinese government just continues to be a big risk. Crypto's fraudulent, video games are attacked. I mean, this all started with Jack Ma and when they canceled that Ant Financial IPO a couple months ago, which was supposed to be the biggest IPO ever. And I believe it was 35 billion they were trying to raise. We have the Evergrande. Is that going to default, collapse? How's that going to ripple through the markets? And then in the US, we have all this mess on the infrastructure bill not getting passed, government shutdown we avoided for now, but we still have the debt ceiling issue, taper talk, when that's going to start, what it's going to look at. And then we're starting to see more and more supply chain issues. We have that ship parking lot off of California. It's at 60 cargo ships are parked out there that can't get in to unload. I mean, that's a bunch of containers sitting there doing nothing. So we've already seen some high profile companies warn on this. Bed Bath & Beyond got clobbered this week. I think it was down like 25% when they said they had supply chain issues and revenue wasn't meeting what was expected. Nike has warned on this. We already know the auto companies, because of the chip shortage, are shutting down plants or limited production or have partially finished cars sitting there. And we can all see the empty lots at the dealership when we drive down the road. Haven't seen anything like that before. So we have a lot of issues. What do we do now as Canslim growth stocks investors when the market's in correction? Well, we study. When we had the 2000 to 2003 bear market, O'Neill had all his guys doing a bunch of research projects and studying and going back and looking at the model stocks and getting caught up on things. Go back and watch the webinars and podcasts with Jim Ropel. He's such a great teacher. Those are on the investors.com site. They're available for free for everybody. MarketSmith webinars, some of those are open even if you're not a subscriber. So go to the MarketSmith homepage and go to the videos and go to the ones, I think they're called classics, and watch the ones that you can watch with Bill O'Neill. Just listen to him teaching the system. Do your research, how to rally days and follow through days work. Articles, webinars, I've covered those in some of our meetup lessons. You'll see them on the list in a minute. Go do some post analysis. We're 3/4 of the way through the year. It's been a tough year for growth stock investors because the indexes have held up so well. And now we see that they've broken. We had all this rotation underneath the surface, all this churning, but the indexes were okay. The indexes were okay week after week. Well, now they're broken. They've caught up with everything else as we looked at. And it's important to remember, I think Scott St. Clair said this, people have always said cash is a position, but he said it, I like this even better. Sometimes cash is the best position now. That means at some point, cash is not going to be the best position. There's going to be stocks that are the best position, equities that are the best position. But right now, cash is the best position now is a good thing to remember. And so we want to be prepared to be flexible when things turn. It could turn in as few as 4 days, starting with Friday was a day one rally day. And so as early as Wednesday, we could have a follow through day. Not all of them work. And again, we're missing the setups. So Mark Minervini talks about that as you pull up to the store, lights are on, the open sign's on, but you go in and the shelves are all bare. There's no merchandise. I guess that's the supply chain shortage I was talking about. But I mean, seriously, Mark made a really good point that none of this works unless we also have those setups. Although we follow Bill's rule, we get a follow through, we wade in, and it maybe just have to buy something like the 50 or an ETF that's growth oriented or an index ETF to get some exposure carefully and only increase exposure as things work. So let's look at a few charts. I'm going to go back to Market Smith and what we looked at last weekend. So I put up these first six. I said, hey, here's six to study, maybe good. And the market just killed these. Look at it. If you go back 5 days, this one's up here. It's above the moving average lines. Looks like it's maybe setting up. Maybe it's going to have a full and complete base soon, maybe a flat base in there, and boom, it gets whacked. Now it's under the 50 and the moving average lines have crossed over each other. Same thing, go back 5 days. This one's right in the buy zone, kind of have a sloping trend line. Maybe you can get in this one in the buy zone. Wham, gets whacked. Simtech, go back 5 days. It's up there in the buy zone. It's broken out of a base. It has some volume come into it on the breakout, and then whacked all the way down to the top of the sell zone. Apps look like, of course, this one doesn't have a full and complete base, but I was watching it setting up. Can it do something in here? And now it's down to the 200-day, and the 50 was already under the 200-day. So Denbury, again, was here. Looks like it had crossed above this early entry slope and trend line, and then got whacked during the week. Came back some on Friday. Square had up last weekend, had this double bottom, shakeout +3, had an early entry, had come back through the 50, bam, gets whacked 5 days down to the 200-day. And then Palantir, we didn't look at this one last weekend, but this was one sort of had conviction in, looked like be able to add to it if it got above here, and then ended up having to sell it all and getting stopped out this week. So the market just got whacked. And the stocks we like got whacked. So that was a few charts. So monthly meetings, here's what we covered in September. We started the complete weekend routine for Canslim investors. You can see what we went through there. We did not get to number 3 and 4. Number 2 took the full 2 hours. Our next meeting is October 12th, 2021. So we did, and we're going to do weekend review again, or go into more depth, because we did 2 hours in September. I didn't want to give you just one half of the complete weekend routine. So part of September was a 30,000 foot perspective. We do keep doing our weekend routine even when we're in a correction. So in October, we're going to go back and do a deeper dive on that. If you've not signed up for one of our meetings, if you're a first time sign up at the Stockyard Meetup site, I send you a courtesy copy of the prior month's meeting, which you would need here since this meeting is going to build on the September meeting. So here was a review on the weekend review meeting. I put this up last weekend. I'll take it out starting next weekend, but just a little bit more on that so you can pause and read that. And then here's a list of prior webinars. These can be ordered. I'll give you my email address at the end. There's some in there on rally days and follow through days, like there. Oh, that one that had written sell rules. We also did rally day and follow through day system. So the green ones are the ones that are most oftenly ordered, although that one I need to change, August 18th, because we just did it. You would order the newer one on that, the one from September. So, and in April, we talked about rally days and follow through days also, because that was important back then. And then the May meeting, this one on the IN Canslim, actually that full meeting's on the Stockyard YouTube page. So you can go watch that one if you want to see what's covered at one of our meetings, and that was the IN Canslim, as well as talking about the importance of liquidity. So questions and contact information, 2 meetup sites, just go to meetup.com. You can search for them. Greenville Eastside IBD meetup, that's the official one I do with IBD, and then the Stockyard meetup site, which I use to coordinate my online meetings. A lot of resources on the Greenville Eastside IBD one. Just go to the More tab, and then the message boards and the top 2 pin posts have a ton of links in them, including the group teaching portfolio, the coloring book, that sort of thing. Twitter handle, you can email me, Greenville IBD meetup, or Greenville IBDMU at AOL.com. If you want to order any of those prior meetings, again, they're $10 each, just as if you attended them live. And then you can go to my YouTube page. There's these weekend reviews on there, teaching on the group teaching portfolio, how to use it, the May meetings on there. I've done a video on the 8-week hold rule because I think that's the most misapplied rule in Canslim. So that's on there. So again, good time to study. Go watch that. I guess 30-minute or less video. So that's it. Hope y'all have a great weekend review. This will be a very interesting week and couple weeks ahead with earnings seasons coming and the uptrend under pressure. We'll see if we get down to that 10% level in correction. And if we even, a good prior market to go back and study is fall of 2018, when we actually had a bear market that bottomed on Christmas Eve that year and had a follow-through day in the following January. So that one may be one to go back and compare to how this one's going. Do we just have one leg down? Are we going to get a second or third leg down? Or are we going to get the bite of the dip recovery that we've had 8 or 9 times this year? Or are we done with that? So that's it. I'm out of here. You guys have a great weekend.